The first one to report its Q2 performance from Motown will be Bajaj Auto. So all eyes on that one to understand how things have played out for the auto major in the quarter gone by. Do remember Q1 was an unprecedented quarter. A large part of it was dampened and sort of dented because of lockdown related woes, and as and when things started to pick up, it was largely towards the end of the first quarter, the June quarter essentially. Q1 was definitely weak. Management also talked about how challenging things have been because of the pandemic, lockdown, precautionary measures, disrupted supply lines, sharp decline of course in demand as well. So there were a lot of headwinds as far as Q1 is concerned. Why is Q2 important to watch out for is because firstly, as we've seen in the volumes, the monthly volume figures reported by all the auto companies, there has been a good sequential pickup for all of them. So clearly, ever since the unlocking started to play out in different phases, different parts of the country and the world, things have started to improve for many players, and Bajaj Auto will definitely be an important one to see, especially because they have a very strong exposure to exports as well. So we would like to see how that has panned out, how the three-wheeler space is also, picked up or not. We like some commentary on that, because do remember in Q1, three-wheeler was badly dented and the commentary was also quite weak or quite uncertain as far as the three-wheeler segment is concerned. Now talking about the Q2 performance, we're expecting revenue decline of about close to 6% YOY. 7,250 crores is our estimate. Now despite lower mix of three-wheelers, we do expect the ASP, which is the average selling price, to increase about 5 to 10%, mainly because of BS6-led price hikes and of course INR depreciation. So these are some key factors which are likely to aid the top line performance and the ASPs. Profits seen at 1,210 crore rupees. We're expecting EBITDA to be flat at 1,280 crore rupees. What about margins? It'll be an interesting one to watch out for, because we're expecting 100 basis point expansion in margins on a YOY basis. Why is that? Firstly, it's the rupee depreciation, better two-wheeler mix in the domestic market, as well as the company's cost reduction efforts, which are likely to drive the margin performance for Q2 of FY21. So it's largely the operating leverage and stable commodity prices as well, actually, which could work well in favor of the margin performance. There are a host of key monitorables that we would also like to watch out for, especially from management commentary or statements in the press release when the result comes out. Firstly, what has been the impact of downtrading? It's something we all have been talking about, discussing with different OEMs and sector analysts, whether or not there's been a downtrading within the two-wheeler space and what has been the impact. What is the outlook of the three-wheeler business? Outlook in key export markets, especially the one in the African continent, extremely important to watch. Recovery trends for Indian market as well is something that we would like to find out more about. Domestic festive demand, how are things panning out? What is the supply situation? What is the inventory levels? And finally, some visibility on the launch pipeline will also be interesting to